Hello and welcome to Money News on Newsmax TV. I'm John Bachman. Joining me right now via Skype from Colorado is David McAlvany. He's the president and CEO of the McAlvany Financial Companies. David, thanks for being back with us.
John, good to be back with you.
All right, I want to focus real quickly on something that you've been talking a lot about lately, and that's the relationship between cash and gold. You say that gold is simply cash at this point. What exactly does that mean?
Well, if you look back at the history of money, what you find is that gold features prominently throughout that history. And there's been various experiments with fiat money where you have nothing backing that paper currency, and every one of those experiments has failed miserably given enough time. What we have today, as of 1971, the US dollar is no longer backed by gold, although that was its history. That was its history going back decades, not centuries, but the world accepted gold as real money in about the 1860s, almost on a universal basis. We had a one-world money system from about 1860 to 1914, and it fell apart only because of World War I. Where we stand today is that there is no gold backing the US dollar. We are the monetary benchmark for every other currency, and there is no gold backing other currencies to any significant degree. So when we look at gold, we don't see a commodity that trades up and down on a daily basis. We tend to look at it as a fixed asset with other asset values fluctuating up and down around that particular value. So the dollar may be up and down on a given basis if you assume that gold is constant, and the Dow may be up and down on a given day, week, or month relative to gold. On that basis, you look at the Dow today. The Dow Jones Industrial Average has lost between 60 and 70% of its value over the last decade relative to gold. And, clearly, in real money terms, the Dow is in a bear market and continues to be in a bear market. This kind of a cycle trend generally sees the Dow end with an 85 to 90% total decline from peak to trough. Again, if you use gold as your constant and gold as your currency reference, and I think that's a more helpful way of looking at it. Just keep in mind, we have the US dollar set against other currencies, which is anything but constant, anything but a benchmark, anything but, how should we say, a plumb line, if you will, in the world of currencies.
So, yeah, lack of stability there. There have been some folks who have called for more volatility, especially in gold and other precious metals as well, with the potential that the global economy might be getting better, but you don't see that. Explain your position based on some of these folks who are calling for more, maybe gold to continue to see somewhat of a downward trend.
John, I think the economists who are hoping for an improvement in the world economy are doing just that. They're hoping. Their analysis is fraught with assumptions that are being proven over and over again to be overly optimistic. The Fed has missed every one of their estimates in terms of U.S. and global growth over the last 5 years, being way too optimistic. Coming into last week, where we had the Fed surprise the market, Bloomberg's estimate, these are surveys of economists. It had crept up from 50% of economists thinking that the Fed would taper because the world and specifically the U.S. economy was in recovery. That number got as high as about 75 or 80% of professional economists considered the Fed activity to be utterly predictable. They would taper because the world and the U.S. specifically was in recovery. And lo and behold, what did we come away with that meeting from? A downgrade in growth from expectations of 2.3% GDP growth to 2%. And, a real sense that no, while the unemployment statistic has come down, the real employment picture has not changed that considerably.
And so gold is still the safer play, the more stable play for people who are looking for a safety position.
Yeah, I think when you look at the Fed intervention and central market intervention around the world and look at the amount of liquidity that has been created over the last 5 years, an unprecedented amount in global history, in world financial history, I think you do look at gold as something that is important in the equation. Here's a simpler way of looking at it, John. If there's folks in Washington who are making considerable changes at the fiscal level and getting us sort of on a road to recovery, then I think you may need less stupidity insurance. But as long as we keep the same cast of characters in D.C., I think stupidity insurance is as important as ever.
Yeah, that's an interesting way of putting it, stupidity insurance. One more topic I want to talk to you about real quickly is Blackberry. And this week, we saw the company announce that it was being sold to one of its largest shareholders and going private. Blackberry also cutting 40% of its current workforce, and rumor has it it's going to be turned into a software company. What's the biggest lesson learned from this cautionary tale of Blackberry for other tech companies out there?
I did a special spot with Bloomberg about maybe 6 months ago on BlackBerry, and BlackBerry was trading at very low numbers at the time. And I said not to bet against the company. At the time, they were just getting ready to launch a new phone, and the sentiment was as dark and as bearish as it could possibly be. Now maybe you've got that same sort of dark sentiment. From the time that we had that interview, BlackBerry shares had doubled, and now they've tapered off again. It's a competitive world in which they were one of the first and best at the business, and they failed to innovate in ways that other smartphone operators have, and they've focused on one particular core clientele. Very intelligently so, to some degree, except they'd never expanded beyond sort of the corporate business application. They will find an ability and a way to survive being privately owned. Being in the public markets, you don't get the opportunity to plan long term or to make strategic decisions. You are counted. Your worth is counted on a quarter by quarter basis. So reasonably so, the market is punishing them. As a private concern, I think they've got a decent future ahead of them with sort of the market animals off their back.
Yeah, signs of times and times that are changing, and at least in the tech sector, at least. David McAlvany, thanks for being with us today. Always a pleasure to talk to you.
John, anytime.
Thank you for watching Money News on Newsmax TV.